If you felt like the housing market has been a total roller coaster lately, you are definitely not alone. But you know what? After a long, steep climb, it looks like things are finally starting to change. So, what's going on? We're going to break it all down for you right now.
It's the question that's on pretty much everyone's mind. Is it finally getting any easier to buy a home? Well, for the first time in what feels like forever, the answer might actually be yes. And the story behind this shift is a pretty interesting one.
Okay, so before we get to the good news, we've got to talk about where we've been. And that's in the middle of a massive affordability squeeze. I mean, it's been a tough time out there for anyone even thinking about buying a house.
Yeah, get this. At its peak last year, it took a whopping 35.1% of the average family's income just to cover the mortgage on a typical home. I mean, think about that. That's more than a third of your paycheck gone before you even buy groceries. For so many people, that number just put homeownership completely out of reach. Now, that 35.1% figure has a name. It's called the payment-to-income ratio, or PTI. It's really just a simple way to measure how affordable homes are. You know, the higher that number, the harder it is to buy. And lately, man, that number has been through the roof.
And just to give you some perspective on how crazy that is, for most of the decade before the pandemic, that number was sitting comfortably below 20%. Yeah, below 20%. So that jumped to over 35%. It was massive. We were living through a squeeze unlike anything we'd seen in a long, long time.
All right, but now for the good part. The story is finally starting to change. There's a real glimmer of hope, and it's all thanks to one big thing that's shaking up the whole market.
And here it is, the catalyst. By mid-November, the average 30-year fixed mortgage rate had dropped down to 6.25%. I mean, after watching those rates just climb and climb and climb, seeing them finally come down, that was the signal. That was the sign that things were really starting to move.
So what does that actually mean for your wallet? Well, the monthly payment on an average-priced home dropped to $2,126. That's real money, you know? It's some actual breathing room for families who've been trying to make this work.
And hey, remember that payment-to-income ratio we were just talking about? The one that was over 35%? Well, check this out. It's dropped all the way down to 29.7%. That's the lowest it's been since the beginning of last year, and it is the absolute clearest sign we have that things are finally getting more affordable. So, when things get more affordable, what happens? You guessed it. Buyers are back. People who were completely sidelined are starting to jump back in. And we're not just talking about a few people. They are coming back in a big way.
The proof is in the numbers. Applications for mortgages to buy a home have shot up to a 3-year high. That's a huge deal. It shows the market is responding, like right away, to these better conditions.
So, if we zoom out and look at the whole country, what's the story? Well, it's pretty good news across the board. All 100 of the biggest markets in the U.S. have seen affordability get better. And get this, about 10% of them are already back to what we consider normal. But let's keep it real, we're not totally out of the woods yet. We're still stretched about 5% more than we were pre-pandemic. So progress? Yes. A long way to go? Also yes.
But you know, this recovery isn't the same everywhere. It's not a one-size-fits-all kind of thing. Depending on where you live, the picture can look totally different. It really is a tale of two markets right now.
Yeah, we're seeing this pretty clear split. On one hand, you've got places like the Northeast and the Midwest, where prices are still ticking up. But then, on the other hand, about a third of the country's markets are actually seeing prices go down compared to last year. We're talking about parts of Florida, Texas, Colorado, and California.
But here's a really interesting twist. Even in those places where prices have been falling, things seem to be firming up. Between October and November, only 11 of the top 100 markets saw prices drop. Now, that might not sound crazy, but it's actually the fewest we've seen in a year and a half. So it kind of seems like these lower rates are creating a safety net, stopping prices from falling any further.
Okay, so this all brings us to the million-dollar question. What happens next? Let's take a peek at what the experts are predicting. And then we've got to talk about another massive piece of this puzzle that impacts millions of people who already own a home, refinancing.
So, what do the crystal balls say? Well, the experts don't agree on the exact number, but the general feeling is that things will keep getting better. You've got Fannie Mae saying rates could hit 5.9% by the end of next year. The Mortgage Bankers Association is a little more cautious, thinking it'll be more like 6.4%. But either way you slice it, the big takeaway is that rates are expected to stay way, way below those painful highs we saw. And this isn't just a story for people trying to buy a house. Oh no.
For the millions of people who bought a home in the last couple of years when rates were sky high, this shift is opening up a huge, huge opportunity.
And you won't believe how much of a difference even a tiny drop in rates makes. Check this out. At a rate of 6.2%, you've got about 4.1 million homeowners who could probably save money by refinancing. But if that rate just dips a little bit down to 6%, that number explodes to almost 6 million people. It's a massive group of people just waiting on the sidelines.
Andy Walden over at ICE put it perfectly. He said, "The market has become more rate sensitive as hundreds of thousands of borrowers move in and out of refinance incentive with small daily rate shifts." So for anyone who got their loan recently, watching those daily rates is like watching the stock market. A tiny move can mean everything.
So that really leaves us with the big question, right? For anyone looking to buy, and for anyone thinking about refinancing, it's become this really delicate balancing act. With the market moving this fast, is waiting for that perfect rate a risk, or is it a reward?